Welcome back to Higher Exchanges. I'm your host, Jesse Redmond, Head of Investor Relations and Business Development at the soon to be multi state operator called Leaf Brands. I'm joined this week and every week by Morgan Paxia. He's the co founder of Poseidon. Morgan, how are you, my friend?
I am doing well. As I always say when we do these Friday shows, I love the Friday shows. It's a nice way to wrap up the week, and looking forward to chatting with Nick here and as we kick off the earnings season.
Yeah, it worked out well. Fridays feel a little bit more casual, which is good in this environment, and also gave us a little more time to digest the reports. And as you said, Morgan, we are not here alone today. We have the perfect guest for an earnings review. He's CannaVestments on X, and he's also active on Reddit. He's Nick Gastevich in real life. Nick, how are you, man?
Good. Thanks for having me back on, guys. Excited to chat cannabis as always. And yeah, good timing. Nice to have kind of three concise reports from some of the top operators to look at. Nothing too overwhelming. And yeah, look forward to discussing.
And I'm curious, you're not active on LinkedIn, Nick. You're active here and also on Reddit. I'm curious if you can talk a little bit about your social media choices there. Like, how did you get, I guess in some ways X is the obvious choice, but Reddit, sometimes is much more active than over here. Have you been on Reddit for a while?
Yeah, I mean, this goes back. It's kind of grew like through our investments in cannabis over the past. I think this is year 10. I want to say our first investment was 2014, so almost year 11. And back in the early days, the cannabis forums on Reddit was like one of the few places to discuss. So I kind of started there, mostly just like following the Canadian names and the couple US names as they went public in 18, and then ended up doing a transition into Twitter or X a couple years after, just because there was kind of crossover and there's some suggestions that their active dialogue was going on there as well. So kind of those two were my main Reddit main forums to discuss cannabis in, and it's just ones I've kept up with over the years.
Yeah, I'm a big lurker on Reddit, not real active in terms of posting things over there, but it is interesting to look at that daily discussion thread and just see how many comments there are. Back in the day, there used to be literally hundreds of them, and now there's something like 30 or 40.
Yeah, it's a good way to judge sentiment because
Yep.
yeah, like you said, it goes in waves. And yeah, I think both Reddit and X bring different dynamics and different ways to kind of like post data, and they're kind of there's good and bad to both. So I think I found both useful in their own way.
And so, Nick, I feel like a lot of people know you from the podcasts and the stuff that you do post on social media, but can give people an idea who you are in real life for people that might not have met you before?
Sure. So yeah, my name is Nick Gastevich. Like you mentioned, I'm in Chicago. I run a family office just alongside my immediate family. It grew out of a real estate development company and diversified into kind of traditional family office structure over the past couple of decades. So we invest in everything from still do real estate as our core business, traditional kind of like fixed income and equities. And then as we evolved into kind of the venture private equity investing space, ended up getting involved in cannabis, just being here in Chicago back in 2014 when the medical program began here. So those names like GTI and Cresco and Verano were applying for those very first licenses. We got involved with a number of them, mostly GTI. Ended up doing a number of private rounds with them, and then cannabis quickly became a large segment of our family business for the past decade. So thoroughly enjoyed it, even though the ups and downs have been kind of crazy to follow. But it's certainly evolved over the years from those early days of not knowing what this industry would become to the go public days in 18 through 20, and now some significant market cycles since. So still involved in cannabis. Haven't done a ton of new investing, mostly just riding our existing investments, supporting existing investments, but certainly follow the space very closely, both on the private side and the public side.
And out of curiosity, that bandwidth or money and time, everything else you used to spend on the cannabis investments, is there a sector in particular that's caught your interest more, where you're spending more time and allocating more capital?
Right now, I would say it's much more boring. It's mostly in the private credit space. If it's definitely been a hot space. I would say for the past 2-3 years, it kind of grew. Banks really retreated from lending in certain segments, and the private credit opportunity emerged, and it's a good way to get 8 to 12% yields depending on the product, and a lot of these are very qualified operators like BlackRock and Apollo who are entering the space and offering lending to companies that have found them preferable for whatever reason to traditional bank lending. And that honestly has been a great complement to the volatility of cannabis and some of our other venture type investing. It's nice to have kind of a more of a cash flowing stable investment.
And I think I've seen your brother post a thing or two about EV stuff or environmental things. Was that an area you were spending some time on there for a while?
Yeah, it's another one of our, I would say, kind of more early stage venture buckets. We mostly do it through funds with, I would say, people who are a lot more qualified to talk about it and have expertise in the space, because that was definitely a large lift in terms of trying to understand it. But it's mostly around the battery storage aspect of EVs and general transition to alternative energy methods. So that is a focus for us as well, and it's been a good one. Certainly, similarly long-term focus as we think countries will generally transition this way.
Well, cool. We appreciate the overview. So in terms of today's conversation, the way we're going to structure things, we're going to talk a little bit up front about what we're looking for in these reports. We'll walk through the last three with GTI, Verano, and Trulieve, and then we'll finish talking about where do we go from here. So guys, let's start at the top, and maybe we can each share a bit about what we're looking for in these reports. And I'll lead this one off and say the first thing that I was looking for, none of mine are super clever. I'm not sure anything I'm going to say today is going to be super clever, so spoiler alert. But the first thing I was looking for was top line growth. At the high level, this is supposed to be a growth story, right? Like that's why we're here. So we saw this big TAM opportunity, the black market conversion. We thought we had years of double-digit growth ahead of us, and that hasn't necessarily, played out how we thought it would have, how we hoped it would have. And there's a few reasons for that. We could talk about this being hemp and black market conversion and some slower state rollouts, but generally from this basket, we're looking at, let's say this basket, the tier one operators, we're looking at 4 to 8% revenue growth over the next couple of years. Certainly for this year, it's harder to forecast multiple years out in cannabis because the state picture is a little bit murky. And guys, I was looking at some data. This came from Viridian. But I could see 3 companies I know of that are growing, that are expected to grow revenue by 15% or more over the next 2 years. So 15% or more compounded annual growth rate of revenue over the next 2 years. Let me start with you, Morgan. Can you tell me who these 3, maybe 4 names are, but for sure 3?
Of the top 10 we're talking about kind of ish?
Nope, public operators.
Right, public. Maybe
2
Glasshouse is still in there.
Yep.
Maybe Ascend, maybe TerraSend, maybe those 3 come to mind.
You got one. How about you, Nick? Anything? Anyone you think of?
Yeah, I'd have to think probably they'd have to start from a smaller base because obviously, if you're the size of a tier one, it's harder to compound at 15%. So I think a name like Verano is probably up there, just because they're about to close on a bunch of assets. They'll have growth by M&A. Trying to think who else might fit that bucket. not many, and that speaks to the issue for sure.
Yeah, exactly. So you're right. You're starting on a lower base. And so there's Glasshouse, which is not a super low base anymore, but they're consistently turning on more capacity. So they have that new greenhouse, which could go towards what Graham calls farm bill flower or more California cannabis. And so that greenhouse expansion is going to drive more revenue growth there. So Glasshouse was on that list. Nick, you were close on the acquisition stuff. Planet 13 from the VitaCann acquisition. Also self-serving but true. Leaf We're going to be hopefully growing revenue at 30% plus over the next couple of years. That's driven off of moving into New York and also planting what will become the world's largest cannabis farm here in California. So we have a couple of unique catalysts driving our revenue growth. And the name that wasn't on that list, and I think it's maybe because they didn't have analyst estimates, was Grown Rogue, with turning on New Jersey and Illinois. I don't know if they're above 15%, but that's another name I think that could fall into that basket. But it makes the point. I get the point of the exercise more being that I'm looking for growth. For most of these larger operators, it's 4 to 8% range, and there's really only a handful of names that are where we want to be, which is more than 15% over the next couple of years. So, growth was the number one thing looking for in these reports. The second thing for me is the political tone. I mean, we are stuck in terms of share prices, and stuck might be kind. We're actually going in reverse in terms of share prices, and it seems like the most likely thing to reverse that is going to be some sort of a political catalyst. And obviously, all eyes on where we are on Schedule 3. Can that get done in 2025, which has big implications from a tax perspective? So interesting to hear the tone on that. Also, interested in hearing the tone on farm bill changes. And if somebody wants to talk about Morgan, plug your ears, safe banking or anything else, that's interesting too. But kind of gauging the political tone was something I was interested in. And then, guys, the last thing I've been curious about is the hemp conversation. And I think that's come up in 2 of the 3 calls. Certainly, with Trulieve having the new product and GTI's emphasis there, it was talked about quite a bit. Glasshouse, like I said, is considering what to do with this new greenhouse they're turning on. Should they make that THCA flower, or did they just do something else with it? We at Leaf, we have a 100-acre hemp permit at Salisbury Canyon Ranch, and we're not planting that this year, but we're trying to figure out when and what we should do with that. So hemp was the last thing on my list in terms of things I was looking for. So top line, political tone, and hemp were the things on my mind. Morgan, what were your top 3?
Well, just to add some different ones in here, EBITDA in this industry is tricky. Definitely cue the Mungerism that EBITDA is another way of saying bullshit earnings, and I think that's very applicable to us as well, especially when you're talking about adjusted EBITDA. But it's kind of what everybody quotes. So I was looking at that. But more specifically looking at operational cash flow over the year, more so. And it's just good to obviously look sequentially quarter to quarter, but how they looked year over year. Balance sheets, how they're managing their balance sheets, what are they doing with are they or are they not utilizing the UTP on certain tax policy? How are they looking at 280E? How are they talking about it? That's diverging as well in this space. I mean, I guess really only one is not diverging. Everyone else is diverging that way.
Yep.
But yeah, balance sheet. Because I still think it's really in a survivor's mode right now. So how people can survive through this, and how they're talking about growth plans, kind of to your point, like so looking at or trying to understand what they're thinking about from CapEx, or is it M&A? Like what are they trying to do to drive more growth? Because so far it's really kind of only one is still growing, the rest are flat to down. And I wouldn't be surprised to see others kind of like that. So, but yeah, so how are they going to drive growth? Because the other point was I was curious to hear about is how they're managing ongoing price compression and how they're driving more volume through their stores that can actually generate growth.
Those are good. Nick, what was on your mind ahead of these reports?
Yeah, no, I think you guys touched on all the major ones for me. Certainly, given this was Q4 reporting, it helped, very helpful to look at full year numbers. I think you get a better grasp, level out some of that quarter lumpiness that can happen and get a good sense of how these companies are evolving. So certainly top line was there, cost controls in the face of price compression, how are they, managing margins in the face of price compression, and ultimately how that's translating to cash flow. And then obviously that interacts with balance sheet quality and their ability to expand and look out in the future. Because, I think my main focus is, where do they, finish the year? And when we look to 2025 and see, relatively few states turning on, like maybe we get Minnesota in the back half of the year. I think New York will grow. I think Ohio will grow. But I think almost every other state is either going to be flat or down. And so that means, 80% of the markets that these companies are in is probably going to, at least be flat or down, and will definitely face price compression in 25. Maybe we get Pennsylvania in the back half of the year, but, I think we're seeing the same kind of dialogue that stalled legislation previously, state run model, non-state run model. There doesn't seem to be any unity on it right now. So when I take all that into consideration, it's like, if you're burning cash today from operations, you don't have a balance sheet to really reinvest in the business. What are you going to do over the next year? And one of those answers certainly might be hemp. And I think is hemp for the companies that are able to do so. I think certainly GTI hinted at that, and Trulieve's foray and with their hemp derived beverage is certainly an indicator that, hey, let's find growth elsewhere, because what is currently available in terms of state market developments isn't quite there.
Yes, and Ben said something pretty strong, and correct me guys if I misinterpret this, but it seemed like he was saying what may look back and say this was the inflection point between hemp and cannabis, where you have this, we may be in this continued political stalemate where nothing is happening. We will continue to see price compression. I thought Ben hammered that more than normal on the call, and then he contrasted that with the opportunity in hemp. And Nick, did you hear that the same way? That he felt we might be at an inflection point?
Yeah, and I think what he spoke to well is, the only concrete thing we've gotten from the federal government is the renewal of the Farm Bill. That's literally the only thing that has passed and dictates something related to, cannabis investing in these companies. So given there's not any action on the federal level in the traditional THC market, there is some sort of stability around the hemp, the hemp bill getting renewed for at least a year. It's not the greatest stability in the world, and I would say you do have to be cautious around what does the Farm Bill look like 5 years out from now. Once they keep kicking it down the road with these short-term renewals, what does it happen when it actually has to be renewed? But given that, it does seem like there's a real opportunity in hemp derived, and unfortunately, I think there's only a handful of companies that really have the bandwidth and most importantly, the balance sheet and cash to make this pivot into this industry, because it really is especially in the beverage space, it's a totally new supply chain. We've been invested in Can and Wonder, some other hemp derived operators, and who have devoted their entire company's history to just doing that. And it's a lot to do, and it's a totally different business. So for some, it's literally not possible if you don't have the cash on the balance sheet to do so.
What did you think about that comment, Morgan? Did you agree we may be at an inflection point, or do you think the hype around the hemp growth or the stalemate in cannabis might be overdone?
Oh, I mean, I think it's wise to, as an operator, to plan on no federal reform specific to cannabis. And so what do they do to supplement a lack of growth? Make sure you have really solid core operating business. And then if you can, most can't, unfortunately, invest where there's growth. And I share sentiment that it does feel like, at least hemp beverage, there's durability there. There's some permanence, because of the Farm Bill, but then also because of the numerous amounts of state level activity that's happened last year and things that are continuing to happen. I was just reading today about California. There's 2 bills in front of Newsom's desk, one of which would bring back hemp beverage back into the state. So just specific to the hemp beverage, nothing else. Everything else would have to flow into retail, like cannabis retail. And I think that makes perfect sense. So we're seeing a lot of progress on the around hemp beverage being more clearly defined at the state level, and with the federal protection. Yeah, it does seem like it is an inflection point. I think it's, as we've talked about before, I do think hemp beverage is a bit of a bubble because there's so many brands popping in there. And I think Scott Grossman had some good conversation about that today, where there's just so many of them that are undercapitalized that won't survive it, but the category does survive. And I know we're in this renewal period, but they're doing the work. The Hemp Beverage Alliance, they're doing work in DC around this to make sure that does have some permanence.
Did you want to jump in there, Nick?
No, I agree with there, and yeah, it's interesting. Obviously, beverage, they're given they're partnering with some aspects of big alcohol, like Total Wine Spirits and kind of these large players. There is more significant lobbying power to to get things done and perhaps make it some sort of permanent market from a federal perspective.
Yeah, I don't want to go too deep on the hemp beverage thing, but just one closing thought there too. A lot of competition, but also I'd like to see more continued differentiation. Morgan, you and I have tried a number of these beverages. Maybe we tried 10 or so far, and sometimes you get the guys like the Flyers, who are putting out things like old fashions and margaritas, and even the Senorita margarita stuff was really good, and it feels like a polished, differentiated product. While some others, it feels like here's a soda with some isolate in a cool can. And I feel like that space could get crowded out. And I think the long term winners is distribution will be key, branding will be key, capitalization will be key. But I also think being differentiated is going to be important.
Yep.
I'm just nodding in agreement, total agreement. Checking all the boxes.
Okay. Cool. Well, let's jump into some of these reports, guys. And let's start out with GTI. This is another good one. They continue to be the class of the industry. I always say GTI is the most consistent and least transparent operator out there. And maybe it is that consistency that allows them to be a little bit less transparent. And I think in many ways, like when I was listening to the call with Ben this time, it seemed like he had a few big picture points he wanted to hammer on. And I thought he did that well. He wasn't getting lost in the weeds about specific store openings, going deep on different markets or products so much, but he had some big picture points on price compression, on hemp, on the political side. I thought he did a nice job focusing on those and really hammering those home. But that sometimes does come at the expense of the details. Those details sometimes get fleshed out in the analyst period. But guys, did you notice like how much shorter some of these calls were just because there's like 3 cannabis analysts left?
Yeah, one of the questions is, Ben, what is your dream? You know where we are as a from the analyst community, because come on, that's not a real joke, or that's not a real question to ask on an earnings call, but yeah, it's and as we saw earlier today, Jesse, that Beacon has dropped coverage too. I think you're going to share something on that. So I mean, it's the crowd's been thinned for sure.
Yeah. Beats across the board here. Sammy J pointed out an interesting stat. They doubled EPS in the last year while the share price lost 50%. So that kind of gives you an idea of what's going on in terms of the industry being out of favor. I thought Ben expressed a concerned tone overall for the industry in that likely maybe it was just heartfelt, but maybe self-serving. I don't mean that in the wrong way, but GTI clearly is operating from a relative position of strength. So when he points out the challenges for the industry, the challenges for the industry, the challenges for the industry, at the same time, he's able to say, these are a bunch of challenges, but here's how we're going to overcome them. And maybe the overcoming them answer isn't easier for some of the operators. But I thought he really voiced concerns on price compression, the impact of intoxicating hemp, but also the opportunity that goes with that. And he seemed very firm, which for people that follow him on X isn't surprising, but sees very little potential for political progress right now. So why don't I stop it there? And Nick, I'll throw it over to you to get into some of the details from the report.
Sure. Yeah. I mean, I echo your sentiment. I thought it was a strong quarter overall. Like you mentioned, beat on revenue, beat on adjusted EBITDA. It's funny I felt like for years, like everyone thought GTI would grow at a smaller clip than perhaps some of their peers who were, expanding into new markets and all these things. And if you kind of look at the trajectory over the past couple of years, it's ended up being the opposite. People getting ahead of their skis, take on too much debt to expand, and are the ones who ended up having to pull back and retract. Whereas GTI really has done the opposite. Like I think they definitely saw price compression coming. So what do? They just continuously reinvested in the business, pretty heavy CapEx spend, mostly in 2023. Certainly it was like 220 million, came down to 80 million this year, projected 80 million next year. And a lot of that is just, automation improvements, efficiency improvements. And, they mentioned like they're able to, grow their gross margins year over year, grow their EBITDA margins year over year in the face of double-digit price compression decline. So I think that's what stood out most to me. Looking at full year revenue, rose from 1.05 billion last year to 1.14. adjusted EBITDA up from 326 million last year to 371 million this year. Gross margins, like I mentioned, it was about 50% in 2023. It was 53% for the full year here. And then operating cash flow is still really strong, even while being, I think essentially with Verano converting to, their peers, no longer paying 280E. I think GTI is one of the few who still does. So, generated 195 million in operating cash flow, and that was while paying their taxes in full for the year. So I think that just offers them a lot of optionality. Their debt load is very low. They addressed it earlier this year. They took out a new facility, a smaller one, and paid down their previous facility. They don't have that. They don't have an uncertain tax position. So all of that cash generally can either go into, one, reinvesting in the business in the form of CapEx, two, share buybacks, which have been fairly substantial. I think it was something like 43 million this past year. I think they retired close to like 2 to 3% of the shares outstanding. And I expect that certainly with prices where they are to continue. Or be acquisitive. I think the Agrify deal definitely stood out as unique. They saw a NASDAQ listed operator who was floundering and saw a different use for it, and are using it for this hemp derived aspect, and able to kind of maximize the value of that asset with that NASDAQ listing specifically. So I think, just like you said, looking forward from a position of strength just gives them optionality ahead. But I think to what you said, I think they see price compression continuing in 2025. I think they see very few new markets turning on, and I don't think they will be immune to that. Like they did mention, hey, I think adjusted EBITDA margins might dip closer to 30% or below. Top line will be challenged by these things. But compared to their peers, they're going to be in a much stronger position. And I do think that's the case. And I think the fact that they're forecasting CapEx again at 80 million is a good indication of hey, we don't have to be conservative. We can continue to play offense.
Yeah, when you think about new states not turning on, like not getting Florida, PA being delayed, not getting Virginia yet, we think about, at least I do, less top line growth. But the other thing sometimes I forget about is the margin impact, right? Like you were saying, that because those new states, that'll give you more money, but they come in at higher margins at first, which offsets the old states. So when you don't have the new states, then all you have is stuff that's losing ground.
Exactly. And I think these companies need to plan, obviously, long-term for prices coming down, but that doesn't mean you can't utilize higher prices during the meantime to feed the business and to prepare for that long-term pricing activity. So yeah, the lack of new states. And I do think this will be short-term. I think we're going through just like a rougher period where legislatively there's less going on, but we still have, half the country that can turn to adult use, including some huge markets. Like when you think long-term with a Florida and a Pennsylvania and a Texas, just the, tens of millions of people that represents. I do think growth will return, but obviously operating in the interim during this period is going to be key to look out for.
Yep. Morgan, what were your thoughts on the GTI report?
Yeah, no, I thought that was a good summary, Nick. The one thing that stood out to me was I appreciated the color that they shared on same-store sales. I think that might have been the first time they did that, where they actually quoted it was down, 2.6% or so. So appreciated that. And then the color around wholesale, that other doors, because consumers want their products. Wholesale is a working part of their business. Certainly with the state caps, they can only do so much within the stores that they can have. So having a robust wholesale platform to sell to other stores so customers that are closer to those stores can still get their products. That stood out for me as a, just good brand building capability that, and talking about Reddit earlier, obviously we're monitoring those boards, and, GTI is kind of usually just it seems like they're well regarded. They might not have like the huge flower drops that some of these, smaller cultivations have, but that have some really high quality stuff, but they just seem to be, really plugging away and as a top performing brand in plenty of the headset data reports across the various states. Obviously hemp is really interesting how much they are talking about that. I thought there was an interesting question around, well, why not if they have these other hemp derived like edibles, like Incredibles and things that they're selling on what is that, on Grubhub, or not Grubhub, but
DoorDash.
DoorDash. Why not fold that all into the Agrify holding company? And maybe from what I just said earlier, that the Farm Bill, the uncertainty around that, but where hemp beverage has some permanence, maybe they don't want to take that risk yet and keep it under the GTI umbrella. Yeah, I mean, the thing with these guys has just been disciplined capital allocation, and seems like they're just staying disciplined and taking offense position where they can, and just very methodical. I'd say over the years, this company's probably had the least variability in its relative to expectations. Its margin profile has moved around a little bit, but not nearly as much as others. And they usually talk about those implications, and they did note that. I think they were the ones that noted that Q1 is seasonally soft, and so they're getting ahead of that and talking about it. So yeah, all in all, it's just just a good quality team that's operating and executing, and yeah, I think otherwise pretty well covered.
Nick, do you think GTI's lead, I would call it, on the industry in many ways, is more a product of the capital allocation decisions or the timing of the capital raises?
I mean, definitely both. I would say more the former. I think a lot of companies actually did a decent job of taking advantage of the timing on capital raises, like raising a lot of money during 2021 when prices were at an all-time high. GTI certainly did that, and I think they did a raise at like $33 or something like that back in the day. So it certainly took advantage of it. But I think some of the companies that are struggling today did as well. I think one, they didn't take on too much debt. I think that's a lot of these companies, when growth slowed and price compression happened, just couldn't handle the interest payments that came with how much debt they took on. And then I do think capital allocation was a big part of it in terms of just how many states they were spreading into and like the timing on that. They never really did any like blockbuster M&A where you added 4 to 5 states at a time. And a lot of the times those deals get the headlines, but we saw it with Trulieve and Grassroots, with Trulieve and Harvest. Like on a map, it can make a lot of sense. And then when you combine the companies, you realize that you have that much more to integrate. And I'm not saying those companies did a bad job with it fits, but it's incredibly hard. You have more overlap. So I think that aspect of it has been kind of key for GTI to like, hey, we're just going to buy this Virginia license, and then we're going to. And a lot of times they just do their own ground up facility anyways. Like they take over a license and just build up like as if they owned it from the beginning. They did that in Minnesota recently. They definitely had some license wins early on, so did it themselves. But I think that aspect of it, of establishing a base and just methodically expanding the business, has generally worked out better than these large blockbuster deals that you either like take on too much debt to expand in order to operate, or like I mentioned, just the overlap involved in right sizing the combined business is just a lot for these management teams to handle.
Yeah, and we'll get into it more with these next couple of operators, but obviously they're lighter on Florida with the other two, which some people were looking at and saying, "What's GTI going to do? What's GTI going to do?" And now they're like, "Okay, cool. I'm all set. Thank you."
Yeah, they did mention that one of the few places that they would be expanding cultivation in 2025, I think, was Florida, New York, and I believe New Jersey. I think those were the three, which is interesting because they obviously, like, Florida didn't go as planned, but I would say they have a decent sized business now there today. It's like approaching kind of fluent level numbers if you want to compare it to like Consortium. So I think they're going to continue there methodically. Certainly not. I don't expect them to get up to like a Curaleaf or a Verano level overnight, but I could see them adding 5 to 10 doors in 25.
I'm just thinking out loud here, but Florida cultivation deciding when to add seems like a different equation than in other states. Because you could look, let's say hypothetically, you believed Florida had too much flower capacity. But if you still don't have enough capacity, it doesn't matter if there's more capacity in other places because you can't tap that market. Do you see what I'm saying? So you could be in a declining flower price environment, but you need to feed your stores. So you've got to build more cultivation.
Right. Yeah, I think as long as you're confident you have the quality to at least push that product and compete from a price point, I think that's definitely true.
And one last question while I'm thinking about it, Nick. Given that you're in Chicago, I'm in California, so I don't get to try many GTI, Verano, Curaleaf, Cresco type products because if they were here, I think all of those have left. Amongst your circle of friends or just amongst the view of people in Chicago, between those larger MSOs, are their products viewed as pretty much similar levels, or is there one that's like, oh, if I was going to get flower, it would be from this one or that one?
I would say there's good, I think the companies generally do a good job of having the different tiered products. And I do think that it actually does stand out. Like if you look at Cresco and you look at their Gold Flora product versus their high supply, there's quite a bit of quality difference between the two. But price wise, there's also quite a difference. And, I think GTI does that. If you get Rhythm, you kind of know that you're going to get the top shelf flower. Whereas if you're going to get one of their either Shine or Good Green products, it's more of a bulk type product. So I think all the companies honestly here in Illinois do a decent job of having products across the quality spectrum. And I think with GTI, Cresco, Ascend, Verano, and then Curaleaf, they all have, I would say, solid market share. There's definitely an aspect of kind of anti-corporate cannabis.
Sure. Yeah.
Like there is in every market, and I think there's been a decent growth of kind of smaller craft players lately, but it's for the most part this is an MSO market here in Illinois.
Yeah. Well, Morgan, why don't you start us off on Verano? Give us your thoughts. We'll kick it over to Nick and go around the horn.
Cool. Yeah. So Verano, just to set the table, they have 153 dispensaries across 13 states, 12 brands, and they claim 1.1 million square feet of cultivation. So it was interesting just on the call before we get into specifics. They did not mention hemp. So Jesse, to your question there was nothing discussed there. Seems like they are cautiously optimistic still on Schedule 3 and banking reform. So it was interesting that was noted. As far as 2024, Verano's stock was down 72% in 24 versus the MSOS was down 45. So certainly took it pretty hard. Revenue came in at 878 million, down 6% year over year. Adjusted EBITDA was 265, call it, down 13% year over year. Cash went from 173 million or 175 million in 23 down to 88 million. They did create the uncertain tax policy, so they did start the program of booking that and not paying the 280E liability. And I think as a result, the stock currently trades, or at the time of the quarter, at 2.8 times 2025 expected EV to EBITDA, versus the peer group around 3.8 times 25. They do expect continued CapEx spend, 25 to 40 million, similar-ish, right, to this year.
This year was 99 because they spent ahead of the Florida expansion, and I think regretted that. So yeah, dropped it quite a bit for next year.
Yeah, that's right. And so far, I'm seeing another kind of view of a bit more deceleration or decline in growth. So, which is pretty amazing when you step back. If these numbers hold through, and we'll see, it's still very early in this year. It's about 100 million less from their peak revenue in 23. So looking at about 840 million. So yeah, so the stock is low valuation. And I know some people are wondering why they sold off more than others. I've heard some speculation that maybe it was a result of transaction they did with say like the cannabis in Virginia, and cannabis is monetizing that and maybe pressuring the stock. But pretty tough year from a stock performance. Does that set it up from a good perspective going forward? It's a good question. But that's kind of my recap of the year. So Nick, what did you think of the Verano Q?
Yeah, I mean, I thought this was clearly the weakest of the three we're covering today. I mean, GTI and Trulieve both grew revenue and adjusted EBITDA year over year, both by a pretty good number. I think GTI was like up 8% revenue, up 13% adjusted EBITDA. Trulieve, I think, was up 6% revenue and something like 30% adjusted EBITDA. As they improved there, and Verano is obviously the opposite. They've just dealt with both top line declines and margin declines, and they certainly pointed to New Jersey and Illinois specifically. I think they had, especially in New Jersey, but in both states, there was the initial launch, a lot of companies did really well, and then slowly just a ton of new retail license got released. I certainly know that in Illinois. So you go from being the only store in a geographic area, and now you have 4 or 5 competitors. So obviously, that's going to have a lot of ramifications. I think especially in New Jersey, a lot of these companies were touting 60, 80 million annualized stores during that first year of launch, and going from 60 million to 8 to 10 million for a single store is a crazy drop to take into consideration. I think this is, for me, I think the Verano one is particularly concerning, just because when you highlight those revenue declines, that was with, I think it was something like 17 new stores opened during the year. That was with Ohio turning onto adult use. That was with the cannabis acquisition of the Virginia license and 2 Arizona stores, only for part of the year. But still, like, you had all those growth levers and the business still declined by that much. I think just speaks to the struggles that were occurring in other states. And for me, I always focus on cash flow, because in this industry, like, especially when we're so capital starved, cash flow is everything. And, Verano went from a company that, I think was generally praised for their cash generation. Like, looking back, 2023, for example, they generated 114 million in cash or tax adjusted cash flow. I always make that adjustment as if they paid their tax in full for the year. They generated 114 million. That dropped to 35 million this year. But even more specifically in the back half of the year, so Q3 and Q4, they had negative 2 million in operating cash flow, tax adjusted. Obviously, like, if you think the 280E challenge will be successful, it's a different story. But I personally don't. So if you take that into consideration, you look at the back half of their year, they were negative operating cash flow. And now you add CapEx spend on top of that, in which case this year was something like 99 million. And suddenly you're close to 100 million in negative free cash flow. So I think that's the concern. And I think that speaks to a big reason behind the share price dropping, is because you had top line decline, margin decline, and ultimately cash flow decline. And all of that means a challenge on the balance sheet, which gives you less flexibility going forward.
And Nick, I'm thinking back to a couple of years ago, maybe we can even go back 3 or 4 years, but we used to think about Verano as being a strong growth story. And do you remember, I'm sure you do, when they were focused more on premium things and they were known for the strong margins? What do you think's caused of Verano's, and I hate to use the word, but deterioration over the past couple of years?
Yeah, I mean, I definitely think a big part of it was just price compression accelerating in a lot of these states, and perhaps just not making the investments necessary to accommodate that. I think when they went, unlike GTI and Trulieve and a few others, they weren't part of that initial basket that went public in 2018. I think they went public something like 21 or 22 from my memory. And right off the back, I think they did like 8 to 10 M&A deals within the first like 12 to 18 months. And that's just a whole lot of energy and time and effort. And just like, you're taking facilities overs with different SOPs, you're, bringing all of these different operations into the fold. And I think they got away kind of from their, ground up approach where they could control everything. And I think that really, like, clearly it's just like weight on margins in the face of price compression. And I think when you listen to the call, they were clearly cognizant of the fact that was ongoing, because he mentioned George, the CEO, mentioned like automation and efficiency improvements like 5 times during the call as the focus for the next year, and which will represent the bulk of the CapEx spend. And I really think that speaks to like, hey, we didn't do enough to prepare our existing operations for ongoing price compression.
Does that resonate with you, Morgan? Yeah, go ahead.
Yeah, I was gonna say, does this feel similar? I know it's not a perfect fit, but it kind of feels a little bit similar to what Cresco had to go through, where they had a couple of years and they just really had to get focused internally and get get everything sorted out. And it kind of feels like they're going through their cycle of it too. Now, is that a fair?
Yeah. I've like thought of that comparison exactly. Like, Cresco, like mentioned as the year of their core strategy, and obviously they haven't reported yet. But when you look at their year, like they obviously struggled with growth, like a lot of operators did. I think they similarly showed year-over-year declines. But to their credit, they improved their margin profile like considerably in the face of this active price compression. A lot of that was like, hey, we have I think it's like a 7-state footprint, not a 14-state footprint. And we're just going to focus on these 7 states and really just maximize the value of those and be the best in those 7 states. And I think that, to their credit, like that year of the core strategy is something that I think Verano like kind of needs to emulate a little bit going forward, and really try to right the ship.
Imagine if that cannabis acquisition had gone through.
Yeah. I mean, we'll wait for the cannabis report.
Right.
They obviously have a lot going on themselves, but I mean, cannabis is a disaster in my mind, and like them absorbing all of that while dealing with their own internal issues would have been, I think, bad for both companies.
Yeah. Well, just to add my thoughts here, yeah, I thought it was a tough quarter in what's been a tougher last year or so for Verano. I pulled some numbers similar to you, Morgan, where the stock's down 85% in the last year compared to 44% for GTI, 56% for Trulieve, and 56% for MSOS. So yeah, really been feeling the pain, especially year to date. It's gotten hit pretty hard. Nick, you pointed out in your in your review something I noted as well, which is falling revenue while SG&A rises. Generally, that's not what you're looking for. Adjusted EBITDA margins down. I think it was 28%. Maybe you guys said it. Historically, they've been 30% plus. So thinking back to a few years ago when Verano was known for its strong margin profile, that certainly has changed in the face of price compression and the evolving situation we're in. New states not opening. I don't think we touched on this, guys, but they dropped disclosures, right?
Yeah.
State by state stuff. And so I've talked about this a lot, but I sometimes talk about it relative to my experience in the hedge fund industry, where early in the hedge fund industry, you didn't have very much disclosure. You got the returns of the managers. You could talk to maybe a PM once in a while, but there wasn't a lot of detail on the strategies they were running. That's because they had the returns to support it. As the hedge fund industry matured, returns came down and disclosure went way up. So you could get much more information in terms of markets they were trading, the strategies they were using. And that partially was when institutional capital came in. They demanded that. And I thought that's the way we were headed in the cannabis industry. I thought, well, we don't get a lot of state by state information. GTI doesn't even tell you how much cultivation square footage they have in each state. And I thought Verano was starting something with showing state by which breaking things out state by state. So you could see, what did Illinois do? What did New Jersey do? And I thought that A, they would keep doing it, and B, I thought the industry would head in this direction because I think it's just generally helpful disclosure to share with people, but also head in this direction because institutions would come in and they would say, I'm demanding this information to make my investments, and these operators are likely to comply. Well, we all know the institutional money hasn't pressured in that direction, and it seems like Verano decided to move back. So now we have no operator that I'm aware of that's showing state-by-state information. So I was disappointed to see to see that change. And maybe that tells you they don't want to share, I think it does tell you, right, guys, that they don't want to share, the data about certain markets, so they don't think it would be beneficial for them to put that out there. And so absent the institutional investor pressure to do so, they said, we're not doing that anymore for now. So you contrast this generally weaker last few quarters for Verano with the falling share price, but you've also got to look at it relative to the valuation. And sometimes people, even though I'm not, cannabis analyst anymore, sometimes people DM me and they say, what do you think's going on with this name? What do you think's going on with that name? And I get more of those about Verano than any other name, just because the stock's been getting hit so hard. And I think, you have to look at the situation always versus what's the valuation, and just glancing at numbers before the show, so don't take these as gospel, but it looks like the stock trades at around 1 time sales versus the other, I think at other two at 1.4, I thought, for Trulieve, and 1.6 for GTI. So 1x sales versus about 1.5 times sales for the other. But the question gets to be, Morgan, I know we've talked about this quite a bit on the show. We even talk about it, relative to Ascend, because you've been long term in that name. And cannabis stocks have a willingness to just keep getting cheaper sometimes. And on a macro level, for sure, valuation is not a catalyst. But even on an individual stock basis, we can see stocks just sometimes just go, cheaper and cheaper and cheaper.
Right. Yeah. It was interesting, reading some of the initial feedback from analysts on it, and they still think it should trade at parity on a EV to EBITDA basis to like a GTI, which I think is interesting that they put them on parity for one that's growing versus one that's decelerating and having some issues around that.
Radically different balance sheets too.
Radically different balance sheets, right? These things are far from created equal at this point. So does it warrant a discount to the cohort? For now, it does. The nice thing is it kind of sets up a situation where if they can start to execute on some, improving some of their margins and even start to improve some of their, growth metrics, then it can set up for an upside surprise. And that is a catalyst, right? Where they surprise the market with better than expected information. When I was reading through this, I was like, are they really just trying to flush it out and do like a baby with the bathwater kind of situation and just really try to reset the table and then grow from here? I think they have the opportunity to do that. I think George is a smart guy, and I think they've got some good people there that can really focus in and make some of that execution happen. But, this market is fickle, and, the challenge with, if like what I've been hearing is potentially, an input in this, that's just, how can you absorb that much paper? You can't. So normally, or for our sector, it will trade at a discount until that selling pressure has been cleared out. And because that's just, there's no buyers out there in this space. So if you just have a big amount of a seller that's going to take some time to get out, it's going to keep the stock under pressure. And again, rightfully for now, it does merit that discount until they can prove otherwise. So yeah, I was just trying to think if there's anything else to add on that, but yeah. So it's like, it's tough from here, or it's been tough for people up to this point, but going forward, I think it's kind of an interesting situation.
How do you think about valuations in these cannabis stocks, Nick? Do you think when something like this does get cheap relative to the peer group, that's something that's meaningful, or do you think with the investor base we have now, it's just there isn't enough interest that things kick in line from valuation changes?
Yeah, for me, I'm definitely not looking at price to sales, just because sales translating to profits is so different for all these companies. So I'm looking at EV to EBITDA, even though it's not a perfect number. Morgan brought up just how adjusted EBITDA can be off, but it's at least a proxy. And I think GTI trades around like 5 times EBITDA, maybe a little bit below that after today. Verano, I think after the drop, is close to like 2.5 times. Trulieve is like 2.8. So the market is giving a premium to GTI, like almost twice as expensive on an EV to EBITDA basis, and I do think that's obviously for a reason. So main two things I consider is how durable is that adjusted EBITDA or profit or whatever it's going to be. Like obviously, if you have a name like Verano who saw adjusted EBITDA drop, what was it, $305 million to $265. So down 13.3% during the year. So if it's declining, obviously the valuation metric that you're looking at isn't as valuable, or you have to place a discount on it if you're saying like, hey, I don't think this is going to generate as much profitability in the future. And then two, I haven't put it out yet, but like as always, I'll look at I always do tax adjusted EBITDA to cash flow figure. And that, that just gets a sense of like, how is that number actually translating to money being added to the balance sheet? Because in my mind, that's always the most important thing. And there's such a huge disconnect between the companies that I think explains the valuation difference here. like GTI had 371 million in adjusted EBITDA this year, and that tax adjusted operating cash flow was 204 million. So that's a 55% conversion rate. If you look at Verano, 264 million in adjusted EBITDA, but only 35 million of tax adjusted operating cash flow. So they converted at a 13% conversion rate. That's just such a it just makes each dollar of EBITDA very different for the companies. If $100 of EBITDA is translating to $13 of cash flow versus $55 of cash flow for GTI, you have to value those differently. And we'll get into Trulieve later. They had a lot of noise because number one, their 280E challenge, and then their campaign contributions. They're somewhere actually, if you take out their campaign contributions, they actually did generate a good amount of cash this year, about 133 million on, I think it was 420 million of adjusted EBITDA. So that's around a 31% conversion rate. So kind of like right in between the two. So for me, I think that kind of explains why GTI, at least from an EV to EBITDA basis, is valued almost twice that of Verano, and then Trulieve, perhaps you could argue is perhaps slightly undervalued.
Yeah, it'd be interesting if you did like to your point, like an EV to your adjusted, and those multiples would be way different.
Yeah, I think GTI would look cheap from that perspective, especially just because a lot of names will be negative cash flow. So you can. And obviously, I think when you think long term, and if 280E goes away, it's a very, it's a different discussion. Like where that lands, like obviously some of that will roll on to further price compression, but arguably these companies should translate more of their EBITDA to cash flow. But certainly looking at cash flow yields, I think reflects more of true value. Because what's the value of, even if it's in $1 billion business, we'll see this with Trulieve. They don't generate any cash flow, even though it's the biggest name in the industry. Like how much value does that actually have if your giant business doesn't translate to balance sheet improvement at the end of the day?
Morgan, anything else on Verano before I transition into Trulieve?
Let's roll.
Let's roll. All right, Trulieve, talking about Florida. I thought this was a relatively strong report, guys. No secret here, huge Florida exposure. So I was looking forward to seeing how they were doing, especially after Amendment 3 failed. But then once I thought about it, I thought we'll get some data here, but we're really early in this process of how Florida is evolving. Morgan, I'd love for you to talk about, you were recently in Florida, and I'd like you to share some of your perspective in terms of what you saw there and how you think this market might evolve. So although this was the first quarter, with amendment, post Amendment 3, I think we'll really have to see how price compression, store counts, everything else, changes over the next year or two. Speaking of, excuse me. Speaking of store counts, they opened over 30 new doors in the last year. So it's nice to see the continued expansion. But again, going back to some DMs, we were trading, Morgan. Interesting to see what's the value of each marginal door, in a state like Florida. Are those still 5 million plus doors, or are those getting down to some, weaker $2 or $3 million numbers? So curious to hear you opine on that. Also curious to see how pricing pressure is going to evolve over the next year. Again, I don't know if this is obvious to people or not, because sometimes things I think are interesting, everyone else thinks is obvious. But in Florida, you have this market where in California, you can buy, if you're a glass house, you could sell glass house flower in your store, or you could go and sell gold flora flower, or you could sell, a cannabiotics flower, that, or the hundreds of, maybe thousands of different brands of flower that we have in California. So Glasshouse can sell some Glasshouse flower, and they like to do so because that has higher margins, but they're not going to sell 100% Glasshouse flower. In Florida, if you're Trulieve, you need to grow all the flower you sell, so you don't have air flower in the Trulieve store. There's a weird exception, guys. You guys probably remember a couple of years ago, was it Air had some sort of a cultivation disaster, and there's like an emergency wholesale market they tapped into. But on a day-to-day basis, if you're in a Curaleaf store in Florida, you're buying Curaleaf flower. If you're in a Curaleaf store in another state, and maybe Curaleaf, it could be something else. So from a supply perspective, it creates an interesting situation where if Trulieve brings on a ton of cultivation, generally that would impact the market more broadly. But in this case, you could still be GTI and GTI could have a flower shortage while Curaleaf has excess capacity. So it's kind of hard to connect the dots at how that all translates into pricing, because maybe if you have more large scale cultivation, you can drive prices down more because you can lower prices in your own stores. And what we seem to see in Florida is once one has a sale, everybody has a sale, and that's what leads to this price compression. So I think we're early in seeing how this is going to play out. Like I said, it's an interesting dynamic where how will one operator adding cultivation affect the other operator? It's kind of a second order type effect. So very curious to see how that market plays out. Curious to see how the store counts change over the next year or two. I think it was talking to Boris last year. He was saying they had kind of two Florida plans. If we didn't get Amendment 3, they had medical stores that they thought were still going to be solid to open, but they had some bigger, generally, or flashier adult use locations, maybe in bigger cities, and they were more likely to hold off on those. So curious to see how the store counts and the increased competition plays out from that. Margin profile continues to be fantastic. Again, this is part of the Florida anomaly, where because it is 100% vertical, you get higher margins through the vertical sales. So over 60% gross margins? I think it was 37% adjusted EBITDA margins, compared to others fighting to be at 30%. So again, that Florida vertical pushes that. The last point, and this is a great transition into you, Nick, is they have an increasingly complicated tax picture. And if you can contrast with GTI and how different those balance sheets look right now. And also, guys, and I'll throw this over to Nick with this, but think about the situation where GTI is able to file for a rebate, right, for 280E taxes, and suddenly they're operating from an even stronger position by getting some of that cash back.
Yeah. I think that's an underappreciated and kind of just overlooked aspect of all these businesses right now, is how important that 280 challenge discussion is. And Trulieve, I think, is kind of the peak of that, mostly just because they were the first major name to do it. They did, I think they were so early that they were able to get some refunds before I think the federal government realized what was going on, and they put out a number of their own statements. But definitely creates an added layer of complexity, because I've talked to some of our private investments who are similarly challenging 280E, and my understanding, and Kim spoke to this, is that this is going to be a multi-year challenge essentially. So I think by the end of 25 and going into 26, you could see Trulieve have $700-800 million in an uncertain tax position, and it's like, what do you do with your cash balance in the meantime? Do you go spend it? Are you able to put it to work, or do you really just have to hold it on the balance sheet, knowing that it might come due? And it's just this weird overhang that again adds another layer of lack of understanding of how it's going to proceed. So for me, I'm just considering it debt. It accumulates interest in the same way as debt. And in my mind, it'll come due. And if look at these filings, look at the way the auditors are handling it. The only reason why the UTP is recognized at all is if they think there's a 50% chance or greater of it essentially having to be paid. Because if they thought they had a greater than 50% chance of being successful in the challenge, it just wouldn't be on the balance sheet whatsoever. So my feeling is this is an uphill battle, and I think the auditors putting it on the balance as a liability admits to that. So certainly it's $445 million today for Trulieve relative to a $299 million cash position. Already uncertainty there as to what they do going forward. But yeah, real quick, diving into the quarter, totally agree. I think it was solid. Margins, like you mentioned, super strong. The year-over-year improvement in margins really stood out to me. They obviously spent a ton of money on that Jeffco facility, and you can look at question the return on investment with that. Margins did improve quite a bit, and I do think that'll have lasting impact. Yes, it was very expensive to build that facility, and automation, everything that went into it. But look, they got an 8 to 10% margin improvement from it, while their peers are struggling. So price compression will continue in Florida. I saw some stat that showed in Q4 year over year. I think prices were down something like 17 or 20%. I forget the exact number, but something crazy. And Trulieve's numbers held up. You're actually improved year over year. So I do think they deserve credit for that. I would point out, like, the revenue grew, it was roughly, I want to say 6% year over year. Adjusted EBITDA was up 30%. But one area to look out for is their operating expenses. If you take out the large impairment that happened last year, we're up something like 23% this year compared to a year ago. And a big reason is that they just opened 33 new stores. You're going to have more employees. You're going to have a lot more overhead. Looking at next year, they identified only opening up 10 new stores is the goal. So obviously a slowdown there, but they did say they would refurbish or kind of like re-update or relocate, I think 33 stores. So clearly, I think they're pivoting a little bit to saying like, hey, we might be reaching our goal store amount, but let's optimize the footprint and really maximize the value. And hopefully, I think control expenses in that way. So overall, I think it was a good quarter. There's definitely, like, obviously you could look at the campaign contributions and, that was $118 million that was wasted at the end of the day. And that really hurts the balance sheet. But I would say, like, again, going back to the tax adjusted cash flow, I get roughly 15 million for them for the full year, but add back that 118 million campaign contributions, it's like 133 million in operating cash flow when you annualize it. So the business is generating cash, and I think that places them in a similar position to not quite as good as GTI because of the balance sheet concerns, but you're at least like generating cash. You can play a little bit of offense. They said they're going to pay down their upcoming debt facility by half. I think that speaks to their ability to play a little bit of offense, as does their entry into the hemp-derived space.
What do you think, just on that idea, though? I mean, they have a slightly larger revenue profile, and they have 60% gross margin. And with all, understanding the noise you were just going through, the operating cash flow is still, pretty good chunk less. So even as like in a favorable of a market, what do you think are the drivers of that cash flow not being as strong?
Yeah, I mean, it's really just, it's because, operating expenses come below gross margins and, in the waterfall. And for them, this for the year, if you take their operating expenses as a portion of their entire revenue, or actually, I don't know if I have that figure, but for Q4 specifically, operating expenses were 52% of revenue. And you compare that to GTI, I think GTI is around 33% of revenue. So even though they're getting the benefit of Florida vertical margins, gross margins being stronger, they also have to just open up way more stores to continue to grow, to continue to expand. And longer term, I think there's questions around like, hey, Florida's only going to, they just released 22 more licenses. Medical patient growth has resumed, but it's not blockbuster. And when you combine that with price compression, I think it's probably close to its like the highest point it can reach in total sales. So I do think that's why they're pivoting, like I mentioned earlier, their strategy towards fewer store openings and more store optimization and really squeezing the best out of the stores. Because, I mean, it makes sense. They've been in Florida for so long. I'm sure they have some like very old legacy stores that just need updating and improve with the lessons they've learned over the years. And luckily, they're at least cash flowing enough where they're in a position to do so. It's more of those outside balance sheet concerns that give me a little bit more pause. Mainly that the tax position, just because it is such a huge question mark. But unfortunately, I don't think we're going to know until 26, 27.
So creating some uncertainty.
Yes, it is an aptly named liability.
Very straightforward.
Yes. We were looking at some data on Florida, and we were seeing down 25% in pricing in year over year in fourth quarter. It's starting to stabilize, but just interesting that they were noting that it really had not impacted them very much, because there was definitely some pretty big impacts in Florida. But I had the same conclusion as Jesse alluded to, that it's their retail strategy that's been a bigger consumer of their cash. Because we were just in Florida last week and looking around and seeing some of these stores, and I'm guessing some of these stores are maybe $2, maybe $3 million stores. And so the fixed cost of those stores, the overhead relative to the dollars generated, is a challenging situation. So it does sound like they're getting smarter about that. They're realizing just opening a store is not the ultimate way to generate cash. You got to be smart about where you're opening stores and how you're managing those stores to do a better job of that. Slowing down the amount of stores you're opening, relocating, just doing a better job managing that downstream effect of your business could really help. But that's been a big question mark for me, is like, just there's this idea of this race to open, and say you have X amount of stores, and most stores or whatever doesn't matter to me. And we were talking about this like with Sammy a couple weeks ago now. Same idea, is like you have 2 stores that are generating the same revenue profile of 5 stores. It's going to look very different from a bottom line contribution. So and that's just been something I've watched with them for quite a while. And I do struggle with the it seems like they really are leaning in even more though on this uncertain tax policies you mentioned, Nick, like letting that really grow, like talking about how they're going to handle this upcoming debt and pay some of it down or refinance it, and some of it's going to go, just trying to shift around on the balance sheet, moving more to that position. And so it's some serious balance sheet games that they're continuing to play. And I mean, it's really unfortunate Florida didn't go. I mean, it's always tough when you go to war with a governor instead of finding a way to work together. And Jesse and I were also messaging about this. I mean, imagine even a portion of that 118 million got to put towards like the new administration. That would even, a reasonable percentage of that we would have had their undevoted attention. It's not a big ticket to get the eyeballs, and $25 million, my God, would have been a world of difference. It's a pay to play game with this administration. And so I'm not saying that, this is just all hindsight at this point, but I mean, it's just obviously very unfortunate Florida didn't go, and that was a lot of money spent. And it was also interesting hearing from the conversation, talking about these 3 different companies and how they're thinking about the political landscape. Jesse, as you know about, and Ben very clearly just like nothing's going to happen, or we're not planning on anything happening, and just going that way. And Kim kind of calling him back, and in a response to that, saying like, we're not working together and we're not getting things done. We need better representation and cohesiveness. So there's an interesting little bit of public discourse happening between those 2. Did you guys pick up on that too, or what did you think about that?
Yeah, and I hear that from other, what should I say, connected people in the industry, Morgan. A lot of frustration, and I think that's because a lot of these, I mean, if we're just being super honest, guys, like there's levels to this. There's companies right now that are at the breaking point, but with the kind of tax positions these companies are taking on, Nick, you were talking about a world without S3 till 26 or 27. I mean, a lot of these companies, as my kids would say, Nick, are going to be cooked by that point, right?
Yeah, absolutely. And, certainly going to be a focal point going forward. And, I think most would admit that it's we're not going to get progress anytime soon. I think even some of the biggest cheerleaders have noted that, Trump certainly has other priorities for now, and that'll probably eat up the foreseeable future. There's still the outstanding rescheduling hearing that, unfortunately got delayed. It'll be interesting to see like who is even there to, influence the next steps. Like we're just kind of in limbo. I assume that ALJ judge is still around and looking to progress it, but we have just no idea what's happening behind the scenes. And
Yeah.
I think honestly, like both are speaking from an okay place. Like I think the idea that we need like a united front is true, but I also think like being pessimistic in the face of no action for decades is also a good perspective to have. So I think I see where both are coming from, and it's it's an unfortunate place to be in as cannabis investors.
Well, let's start to wrap it up, guys, and talk about where we go from here. I think just if we're really candid, like we're in an uncomfortable spot. And when I say we, I'm speaking about the industry as a whole, because one thing I've learned from going over, as a cannabis analyst, looking more broadly at the industry to now working for Leaf in a more specific capacity, focused more on California, focused more on New York, focused more on, project-based things, planting a new farm, all this sort of stuff. Everybody's fighting their own different battle every day, but there are some common challenges that we have. I'd say the growth the lack of growth, again, if you look at the tier ones, I think that's pretty similar, kind of in the 5 to 10% range. You get some outliers on both sides of that. So I think maybe there's a little bit more dispersion on the growth side. But certainly, when I looked at coming late last year, Morgan, we were talking a lot about what we were excited about. Maybe more middle of last year, we we're talking a lot about what we were excited about. And we thought Florida, I mean, I maybe said was like 80% if I had to say a number. Like, everyone thought Florida was going to pass. There really wasn't a big dissenting voice. And then on Schedule 3, there were some that were saying it was going to get done last year, right? And the consensus view at Benzinga last fall was probably first half of this year. The more optimistic people were saying Q1, the more pessimistic people were saying Q2, or, oh boy, guys, what if it's not till the second half of not last year? Boy, that's a long time. And here we are, no Florida, and Schedule 3 seems to be, anyone's guess at this point. Anybody with a strong opinion on that, I just don't know where they're getting it from. And anyone, honestly, with a strong opinion about reform in general at this point, I don't know where they're getting it from. It's complete speculation about what's going to happen. So in the meantime, we're facing those challenges, and then we're facing, slower growth this year on the state level, where Nick said, Minnesota, Nick, that was supposed to be Q1 of this year initially. Is that right?
Yeah, now I think it's unknown. I'm hoping
Yeah.
back half of the year is kind of best case.
Yeah, so let's say, Q4 in Minnesota, and that's cool for what was it
GTI.
GTI and Vireo, but that's not going to boost the industry. It's at the industry level. It's kind of up to every operator to figure out where they're going to get that growth from. Maybe 26, we see some more opportunities there. And on top of that, you overlay this other thing, which is a kick in the nuts that I didn't really expect, which is this intoxicating hemp business. I remember when cookies first came out with that THCA flower, I was like, oh, what's this silly little thing that they're doing? And it turns out they were one of the early adopters there, and ahead of the curve. And now that could be something that continues to be, will continue to be a challenge for all operators as it takes, as that in the black market takes away revenue. But also that could be an opportunity in some cases. So my takeaways are that I think broadly, if we're just really candid and the stock prices, reflect this, we're at a really tricky position where you have a lack of growth, broadly speaking. You have an insurmountable in many ways tax position with really compromised balance sheets. You have a lack of clarity on if or when we're going to see federal reform. And then you overlay that there's this new thing that's growing really quickly, relatively new thing in this intoxicating hemp market, where you can get similar-ish stuff. A lot of it's trash, but to the average consumer, similar-ish stuff, either cheaper, more available, or even just mailed to you directly. So we have this new competition that that for me at least, I knew existed, but I didn't really see coming. And so I think that it really comes down to being selective with where you're making these investments and understanding, like, given this real clear set of challenges, how are these companies going to get through this? Because it's not a clear assumption that they're just going to get that reform is going to come, the stock prices are going to double, there's going to, SAFE is going to happen, there's going to be a line of new investors out the door, credit markets are going to open up. Over a longer time frame, I think those opportunities still exist. But the fact it's taken so long to get here has taken such a toll on the balance sheets of these companies. And now this new market over here is growing that's eating, more of that revenue pie. And so I guess, amidst these challenges, I would just be really conscious of what the plan is to get through them. Where is the good growth going to come from? Like, Nick was harping on, what is the tax strategy? What does the balance sheet look like? And absent reform, which is a really hard thing to think about, if you're just super honest about making investments, absent some sort of a change, where are you comfortable putting your money? And maybe the positive that goes with this a bit is how cheap these stocks are, how horrible sentiment is. Everything you'd look for in a bear market bottom is here, like the insane valuations, the analysts leaving, like, hey, former analyst, I left. You just saw someone from Beacon leaving, McGinley's gone, you can, go down pretty much, talked to Scott Fortune the other day, he's gone. I talked to Mike Regan the other day, he's not focusing on cannabis anymore. We could go down the list and so many of the analysts are gone. The stock prices are super cheap. The sentiment's never been lower. It looks like we're in the trough of disillusionment, but we need some sort of a catalyst, to pull us out of here. And so I don't know, I feel like that was long and rambling, maybe not particularly helpful, but just kind of what's on my mind. And I guess, what comes down to at the end of the day, I'd just be real conscious of what you're investing in. Be sure that you think the growth can be at the company level and that there's a way to get through to the other side. So why don't I kick it over to you, Morgan, and we'll close with Nick on this chapter in terms of where you think we go from here.
Yeah, I mean, I think it's just more and more a continuation of what we've been talking about, the haves and the have-nots, and really understanding to pick your spots, because some of these companies that I know everyone's worried about this debt cliff coming up, but reality is most of these debt groups are not in a position to default these businesses. They don't want to take them. They don't have any way to work out of them. So what is their real option? And I think cannabis is an example, is you've got to extend. And so what does that really mean? Is the common is just getting decimated and really not ownable? As Jesse, I've said, we've talked about many times, like, the common's worthless in a lot of these companies. Doesn't mean that the companies won't exist.
Yep.
They will, but they're not investable. So I think it's just getting clearer and clearer that there's fewer names that you have a shot at recovery whenever the day comes, that should these things trade at a higher valuation, or they grow and have the ability of earning a higher share price just from the ability to grow and grow cash flow. So I think it's just getting more clear about that. I don't know if the market is really still not necessarily doing it. I mean, I know you quoted some stock performance last year, for how these things have performed, like GTI and Trulieve versus, some of these others, like Verano being down way more. But still, I mean, we're talking about low valuation overall, and how do you get out of it? But I mean, I just take comfort in, like, the ones that look better, are performing better from a fundamental perspective internally. We see this on the private side too. Good companies are doing okay. Like, they're not waiting on reform to build their businesses. They're just going forward. But we have a serious liquidity issue in this industry. There's no exits. There's no exit multiples. There's just, like, we're not functioning. So I don't know how that changes. I mean, I can share a little bit of insight from what we're hearing from folks. Is it's not even that Trump hasn't said anything about cannabis. I mean, it would be nice to be recognized, but there's also just more of like and I think this is representative in the larger markets too. Is there's so much activity going on that people don't really understand what's going on, and it's causing risk-off sentiment, and that's not going to help us either, right? So, because we are still in a risky situation as an industry, and so it's just, when will things cool down a bit and calm down, and so that light can shine through to us? I have no idea, but in the meantime, I think it just comes back to the idea of really being careful and pick your spots and how you want to play. I think there's interesting sides on the debt side as well in certain circumstances in this space, but I just think it's there's also a lot of bad debt in this space too. I think there's opportunities. I think it's just being very mindful and being very realistic about what does it really mean from an exit perspective and when. And, obviously that timeline just keeps getting extended the longer we go in this, but if you're in good names, then, you can just kind of be patient with it. But yeah.
Nick, where do you think we go from here?
Yeah, unfortunately, I think the pessimistic view and the patient view is kind of the only answer here. It's funny, we reviewed the three of the larger players today, and two of the two ones who I think did well, and obviously didn't get any benefit from it share price wise. I think once we start seeing some of these tier 2 and tier 3 names, it's going to be even worse. Like I think the back half of 2024, and I think the start of 2025 is going to be really rough. And I thought consolidation, as most people discuss it, like, would happen quicker. And I do think companies have done an okay job of just extending the lifeline with, cost reductions, choosing to not pay taxes anymore. But all of these are kind of just temporary moves to extend life. And, I think 2025 is going to be a tough year for most, when you combine that with some of the other things we discussed today, like, lack of markets turning on and continued price compression. I'll use Scott Grossman's bifurcation type of word again. And, to Morgan's point, finding the names that are just doing well enough in this market to survive or even play offense, because they might not get rewarded for it. And it's hard to take wins in things like, hey, my name was down 40% when the index was down 60%, but that's a relative win. It certainly doesn't help and doesn't make it a successful investment, but it is important to realize why that happened for a reason. And I do think, when you come out the other side, and I do think there's another side. This is a large industry, there will be winners. And I think the winners are being, it's easier to identify them than it has been in the past, at least from my perspective. So if you're taking a really long-term investment view, I think there is money to be made. But I think it's perfectly okay to say hey, I don't think anything's going to happen in 8 to 12 months. And if you want to go put your money into other sectors, that's also perfectly fine. And realize that you can revisit and not try to time the bottom perfectly. But I do think, there's no new money, but if you were new money coming into the space, if you could identify the companies that are making money in a tough environment, that will be around in the long term, you can get in at a pretty good price today. So I do think there, is that attractive nature to it, but I think in the context that hey, good operating performance isn't going to be rewarded anytime soon.
Yeah.
And if it is, it'll be at a very marginal level. And just realize that's the reality of it. But I do think that offers an opportunity. I think consolidation does have to happen. And ultimately, I do think that will help. I think it'll help slow price compression. I think it'll help normalize markets. I think it'll lead companies to return to growth trajectory. I think the best companies will return to strong growth. I think you've mentioned that 5 to 10% mark. I'd be surprised if many companies hit that. I think most companies are going to see negative growth for the foreseeable future. I think that's the case for 2024. I think that'll be the case for 2025. So I'm not expecting any growth, mostly negative growth for most operators. And I think seeing through the clouds and seeing who's doing well in a tough market is kind of the only way to play this space.
Yeah. And if I were to put on my more optimistic hat, I think the destination is still the same. Like you mentioned earlier, Nick, we have 24 adult use states. Eventually, I think that number, gets to 26. We trade on these, lower exchanges. We have anemic volume. Eventually, we'll end up on the NASDAQ. I don't think we're going to be stuck at Schedule 1 forever, and I don't think 280E, lasts forever. So I think that's another catalyst that, we'll hit down the road. And I think one day, we will see banking reform. It's just that we're in this painful period where it feels like we're stuck for now, but that doesn't mean that we're stuck forever. And it doesn't mean, cannabis by no means is going away. Cannabis itself is only increasing adoption. Unit volumes are generally going up. You're seeing increased usage across most categories, especially as the younger people drink less. So I think there's a lot of things to be excited about in cannabis. But it just feels like right now, from the cannabis investing perspective, we've had a bunch of things, go about as bad as they can for a few years now, and it puts us in a temporary uncomfortable position that the industry will get to. And I think if your time horizon is what we hope it is as a cannabis investor, 3 to 5 years, 5 to 10 years, I think there's still a case for a buy and hold. I think what you're saying, Nick, I don't think share prices are suddenly just going to magically start wandering up, right? Until something changes and buyers come in. I would expect things to be, lower volume, select things moving up on news. But generally speaking, I don't see a case to be super bullish in the short term. That doesn't mean if you're a long-term investor, it's time to, panic and leave. I don't think the story has changed. I've been talking about this notion of, I think there's a fine line between being early and wrong. And maybe we're starting to cross over that line where it feels like you're wrong, which is also kind of the same thing as saying you're too early. So I think we get there. I just think that we're in this uncomfortable period as part of that transition.
While we're talking about some optimistic thing, I mean, I think, state level activity could be a surprise for some growth. Meaning, what if a state like Massachusetts, as we've talked about historically, what if they raise the caps on the number of stores? That could open up acquisition opportunities. It could open up growth opportunities where they're otherwise largely capped out. And it's a lot easier for state progress to happen. And so if they start to see states, where stores are going out of business and they don't want that demand shifting back to the illicit market, maybe they'll reflect on that and open up the caps a bit, and that could allow for some more consolidation. That would be great for those that are in a position to do that. And that would be, that certainly is not baked into anyone's assumptions, rightfully so, because it's not like there's anything like in the news right now that is actively being discussed. But we are aware that there are the discussions happening and trying to educate regulators that some of the idea of a limited license is good, but when it's too restrictive, there's the unintended outcome as a result. And so, we could see some maturity around that. Obviously, Florida's different because it's just licensed. You can open as many stores as you want, but other states do have that firmer cap. And so that could be a nice catalyst that could be a tailwind for some of these operators.
Very good point. And there are markets like Ohio and finally New York is cleaning up as well. So there are a few bright spots out there.
Yeah.
Let's get late on a Friday, guys. Morgan, you want to wrap us up with a Ask Rock and we'll get out of here?
Yeah. I love this grok because it feels like everything we were just talking about. So, and it was a little bit with some fun discourse on X, but I asked grok, I said, was GTI's annual report a bellwether for the cannabis industry? And grok said, GTI's annual report is a strong signal for how well-capitalized, vertically integrated MSOs can navigate 2025's choppy waters, making it a partial bellwether for the industry's upper echelon. However, its unique financial health and scale don't fully encapsulate the struggles of smaller firms or divergent state markets. It's more a beacon for what's possible than a mirror of the sector's average fate. For a broader bellwether, aggregating reports from GTI, Curaleaf, Trulieve, and others would be better to reflect the industry's pulse. It gave me this huge answer, but I just focused on that.
Have you noticed any different in the Grok 3.0, Morgan, the new version?
I think it's incredible. This Grok 3 it's fast, it's smart. I mean, I communicate a ton with it. I've been very impressed with it.
Do you use it the same way you would use a Chat GPT?
Pretty much, yeah. I mean, I still defer to, I work, ChatGPT, Claude, Notebook LM, but Grok 3 is increasingly getting some of my market share.
Huh. Nick, are you using any of these AI tools much in your day-to-day life?
Not too much. Definitely I think the same way that Morgan kind of just reiterated, for general use and overviews, it's helpful. For kind of day-to-day questions, certainly helpful, but not too much in kind of like our work activity yet. I still try to go to, actual sources if I can and still do the work myself.
Yeah. Yeah, you definitely can lean into these things too much. I've been fascinated by putting some different agreements I've been working on there and say, do you see any red flags in this agreement? And sometimes it'll pull up some interesting stuff. And yeah, so it seems like one of those things you don't want to, you can underuse it, but you can also lean on it too much. And I especially think with the younger generation, having a 15 and a 17-year-old, they definitely lean on these things. Well, why don't we wrap things up here, guys? Nick, very much appreciate you joining us. Always a pleasure to have you on the show. So thank you for being here.
Yeah, thanks, guys, and enjoyed it as always, despite the pessimistic talk for the most part. But I think it's good to be real because I think
Absolutely.
I think overpromising has been one of the biggest mistakes the cannabis industry has made to itself repeatedly for quite some time.
Very well said. And next week, Morgan, we're back with Jason and Ziad from Terracent. Do you know if that's a Thursday or Friday next week, Morgan?
It's a Friday show.
Friday
same time.
Show. Okay. So same time, same place next week. Morgan, Nick, good to talk. Thank you all for listening. We'll see you in 7 days. The views expressed in this podcast are provided for informational purposes only. Nothing we said should be considered research or a recommendation. All investing involves risk, including the loss of principal.